And everybody, it's Tim Reazor with Revere Asset Management, just after 4:15 here on a Wednesday. So very quickly, stock owners, market alerts before you and I begin to look. The VIX may be signaling brighter days ahead. We're going to talk about that. But then there's also this thing with resistance, and we're going to have to talk about what? The Fed. So, but before we do that, stock owners, market alerts, look, the new website is up. Helping you navigate. Look, tomorrow's insights are all here. Have any questions, missed any of the videos, just like the old website, every video we've ever done here, it's the best way to back test us. If you want to see or watch any of our recent podcasts, by the way, podcasts are super duper popular with the video version. Always a clue here is what we're talking about when you see the little art tile that we started making when we revamped the entire show. And then any questions about our strategy, just go to About Us Strategy, and it's where you can find us. It's where you can reach out to us. So you'll see the portfolios that we run, and you'll see the people that run them. And look, if you have any questions about that, want to talk to the people that make all the decisions, the portfolios, Don, Hunter, absolutely reach out to them. They're available to you. Can get a hold of me. And then America's Fiduciary right here. Tell you what, so many of you have been reaching out to him about, we don't sell insurance. And so when we give you an opinion about insurance and how it's not an investment, it's not legally allowed to be called an investment, or why your annuities aren't performing the way you thought they would, Danny is one of the best in his field in the entire country at this. And so a ton of you have been reaching out to him. So you can get a hold of him at 855 Real Wealth. As always, that's the phone number, 855 Real Wealth, or you can reach out to him right here, Dan at revereasset.com. If you want to call us, by the way, if you want to call us, just go to the website, whether you're on mobile or desktop, and you can just hit the little phone button right there, and it gets a hold of us right away. And then, oh, look, with Twitter, look, I get a ton of messages every day. Email is a little bit longer for me to get back to you just because my inbox does fill up, but Twitter is super quick, brevity. My DMs are open. They show up right here, like their text messages, and you can get a hold of me anyway, anytime, and I will get back to you. And it's really quick for me to do that. So feel free to use Twitter. Okay, so with that, stock nerds, market lovers, these videos, they are for what? For your edification purposes only. They're never, ever to be misconstrued as advice. When advice is advice, all you have to do is in fact give us a call. So real quick, I need to show you a couple of things before we even start tonight's video. And so look at, these are the ticks. And so this is the buying and selling right off the New York Stock Exchange. So on Thinkorswim, it's about an amalgamation of 3 exchanges that make it up. If you're using TradeStation, it's right off the New York Stock Exchange. So right down here, if I can get my mouse back up, there we are. So right down here, Wednesday, you can see that we opened up, we gapped up Wednesday in the markets, but then Jay Powell starts talking, and I'm telling you, the minus 1600 ticks is, I mean, it took a market that was just, so I'll talk in Dow points, most people talk in Dow points, that was plus 500 Dow to negative, like negative 25 or 45 Dow. It was in such intense selling and dumping to only rebound. And if you're like, well, what did Jay Powell say? Did he tell you he's going to give everybody a golden goose and it's going to lay golden eggs? No, he didn't say that. He didn't say anything like that. But that's the nature of these markets. And are we in a bear market still? We're in a corrective market still. And these rallies can be ferocious. If you were expecting the whole world to end, you know, everybody's short and they cash in their chips, you know, they get a reprieve. And then the buying starts. There could be a number of things. Did they think it was going to be worse? And you know, when it wasn't, so the buying starts. But what I need to point out to you, so those are the ticks, and the ticks were really confusing this afternoon. But this happened. The VIX future is normalized, and that's kind of a big deal. And so 27.45 prices below 27.80, prices below 27.96. These are all full contracts. This one just rolled over, I believe, this week. My gosh, that is a big deal because that actually went into inversion the weekend. So Friday, right? Friday happens, and then on the 24th, Putin invades Ukraine. They go inverted on that Friday, right? Signaling the markets knew something, right? Putin invades here, and they've been inverted ever since until what? Today is the 16th, until March 16th. That's a really long time to be inverted. And so they just came out of it today. That is interesting. Now, do I think it's all over? Is it all clear? Look, it doesn't matter. I mean, what took place in the market today is pretty astounding, and you need to respect it. But I mean, what changed? And so, like, it used to be, you know, just last week, right? If the TNX, the yields were going higher, and look at this, the yields spike higher today, but they do come off. Yields go higher, yields will still up 1.3%. That was bad for tech. But the yields say, look, the yields peak at 22.46, and they come back down. And if we come here on a, let's do this on a daily chart. So yeah, what did yields do today? They came up to where? That magical third ATR, right? And what happens when rates go up to that third ATR? Yeah, when they start to come back or they start to regress, tech typically benefits. But today was a special day. It was Fed day. And so there's a lot of mix. This is just but one piece of the puzzle. The put call ratio, does it give us any clues as to what was taking place? Put call ratio, man, if you would have seen this, look at this ADD. This is where we started, right, with Powell, right, plus 1800, and it came all the way to cut in half, only to rebound and take out the high. Put call ratio, this is neutral. This isn't bullish nor bearish. This is neutral. And so what are we left to surmise? That this is a market in flux. Could it be transitioning to bullish? I don't know. But I mean, look at this. Look at this fall from grace. You're up here near 43.42. You come all the way down and then only to come back up. I mean, you know, that V shape. You just don't see it that often. And so it leaves the markets in a state of confusion, like the Phil Collins song. This is the world we live in. These are the hands we're given, and I think the song ends, you know, like this is state of confusion. And so, what is it, an late 80s Phil Collins song? Land of Confusion. And so, let's look at the S&Ps here. I'll tell you what, we'll do the SPX. Or we can do SPY. We'll do SPY. Most people talk SPY and QQQ. So we'll look at the SPY and see where we're at here on the daily chart. And I'm going to show you a couple things. So this white bar signifies you got a 5-8 cross fast. These are the fast, tight, typically tight type of buying signals. But look, you're just coming back to March levels. Is there anything to get excited about? Well, it's one close above the 21 for SPY. That's nothing to sneeze at. But are we at some kind of resistance? And I typically have this mapped out on the futures, and we are, right? We're at a moving average. Kind of in this quasi-fib zone that I've got mapped out here. Can we proceed higher tomorrow? Yeah, absolutely. The market can do anything as evidenced by today. But there's also a piece of the puzzle that I didn't mention at the top of this video, and that is what? Quarterly rebalancing. We'll just call it REB, right? Quarterly rebalancing. And what does that mean? So let me show you on the NASDAQ. So on the NQs. So on the NQs, what do we have here? Well, we've got same situation as the SPY on the NASDAQ futures, but all those stocks like Amazon's, all those stocks that got sold off. I mean, look at this chart of Amazon from the beginning of the year, right? So if we look at this chart from Amazon from the beginning of the year, 33.87, it's been pretty beat down, wouldn't you say? And if we look at the same chart of Microsoft, and if we look at the same chart of Apple, and we look at the same chart of Tesla, they're all beaten down, right? And they're just been taken, you know, and you could go snowflake, right, up 16% today, but still beaten down, right? And so what happens in a rebalancing situation? Well, all those XOMs that got snapped up in Devon. So maybe the portfolios are a little too heavy energies, are a little too heavy staples, like Procter Gamble, right? Are a little too heavy, these stocks. And they don't just do it at the last, and isn't rebalancing quarterly, and it's the middle of the month. They like to do the rebalancing on high volume weeks, especially on high volume days. And this is quarterly expiration. So they have up until the end of the month to rebalance, but you don't want to put all this volume through and rebalance these massive mutual funds, pension funds, you don't want to do that all in one day, all in 1 week. And so I think what you're seeing here, and look, it's just my opinion, and my opinion matters as much as yours does. I think what you're seeing here is a couple of forces at work here. Definitely some short covering. And then I think you've got the rebalancing component. And so was this the time to step out and buy Tesla? Well, these videos are for your edification purposes. I'm not telling you what to do, but you're at resistance. Doesn't mean it can't run higher, right? It doesn't mean anything. This market is, and I want you to focus in on the indices here. If the indices are going to go higher, the 80% of these stocks are going to move higher too. High tide raises all ships. And if the tide's going higher for the NDX and the SPX and the DIA, let's look at the Dow. And so where are you in time and space? Because I think your situational awareness is important here. What a move for the Dow, right? I mean, you've cleared the 21. You're above the 30, above this 50% retracement level. Is this all she's got, Captain? Hard to say, right? Because what are you, a headline away from, a lot of headline noise right now. And so what's the overall trend? Yeah, still down. Well, we should probably look at a weekly. Like, can we get just a little bit more perspective here? Yeah. And so here's the YMs. And I think what you'd need to see, I mean, but these are big levels, right? 34,000 is where we're at right now. And that would be 700 more Dow points that we could come up to in this weekly mean. Is that what's happening? We're about to test the weekly mean. Like, let's put SPX up here, the S&P 500. The S&P's weekly mean is all the way at 4452. And you're saying you're not going to participate in that? I'm saying if you're going to, because and it's okay to, maybe you reduce size. Reducing size reduces risk, allows you to be more nimble, but it also helps, right? It also helps if you have a list. And so I went to a list that I particularly enjoy. And this list is moving average stack with high yields. Because look, the inflation is eating away at your buying power. So can you get some modicum of growth with yield? And this list is super revealing to me, right? Because the names that are showing up here, like, they're not going to give you, like, let's look at Microsoft again, MS. Let's look at Google. We don't look at Google. So here's Google on a weekly chart. Yeah, this is like resistance level here, and a great quarter. It's going to do a split in the summer, and yet can't get out of its own way. Here's a daily chart, and you can see this chop and fest, right? And so is this the time to reach out and buy Google? And the thing is, like, once, twice, 3 times, and now maybe it's ready to go, and it might be. But what would be better here to see to know the shift is on? I mean, I think if you default here to the weeklies, right? You get above this 2734 level. Yeah, you probably, these moving averages start to shift on the daily, and then you got something going here. Still potentially buyer beware, but you could be on, I mean, the allure of buying low and selling high is so incredibly strong, and you're just looking for clues, and it's not easy right now. It hasn't been easy all year, but it's, I mean, look at gold, right? Gold didn't sell off today. Gold rebounded today. 7 rate hikes, that's what the Fed's talking about. Gold doing well. Did inflation just go away? This is a weekly chart. That's a bullish chart of oil. But look at what happened with oil, right? It's come back to the 24th levels. It got so extended. And so the thing to think about is this the time to buy the bottom, and I'm using bottom in air quotes, of Tesla, right? Is this the bottom in Tesla? Is this the bottom of Google? Or is this the opportunity to not buy energy extended, and this is your chance? You see, and that's the thing that the market hasn't really given to us yet. But we do see this. So we have one clue that, when this comes out of inversion and normalizes, risk is coming out of the market, no matter what's going on in the world. And so that's a really big clue, but we don't operate in a vacuum. I'd feel better about this clue if the put call ratio was up here and everybody was bearish and we normalized. Oh, I'd be telling you, oh, this is a signal. It's just not. And so it's incredibly hard. So back to this list of stocks. So we'll take a gander at this right here, because it's interesting to me where these stocks are and what they are. So like when you look at, and I have them sorted here from highest to lowest div yields, okay? And we'll just look at a couple and you'll get the idea. Here's EPD. And so EPD, yeah, not extended anymore. Mo, Big Mo, right? Tobacco, not extended anymore. KMI. Oh, boy, that's a brutal sell-off, right? How about Williams? Below 21, you're like, Tim, these charts are pulling back. These are not going to be in vogue. These, and you might be right. Here's XOM down at the 50-day. Buying, I often talk about buying. I think the 21 is your point of, it's your least risky buy point, but this is an opportunity. Oh, let me really be careful here. You'll know it's not going to work right away. If it doesn't hold the 50, doesn't matter what it is, you're out. Something to think about. VLO, energy, right? Here's Kraft Heinz, Staples, CVX, energy. Is there anything on here that's not energy? Oh, Amgen. Now we got something here, friends. Amgen, 5, 8, 21. Oh, we're working on that stack there. And that's something. LMT is pulled back, right? COP. How about AZN? Astraca is that again? It's still a little off. J&J still a little high. Let's do Archer Daniel Millman's Ag, the 21. So that list, I saw a couple. And so judicious, be very judicious, because I'll tell you what, the tick action today from minus 1600 to minus 1400 this is not a normal market. And so as the market figures out who it wants to be, both open to the bull and the bear side, it behooves you to remain extremely, extremely cautious. And so with that, I hope you have a great night. Podcast on Friday, of course, we'll get it done super duper early so you can have it and listen to it and enjoy it all Friday into your, get your Saturday morning with some coffee and some tea and get going with some knowledge. And then Hunter's got your video and Don's got your 21 over 21 on Friday night. So we'll see you, of course, at the next update.